Pranav Rao from Smartkarma, and I'm delighted to have with me today Jacob Cheng to discuss his positive view on the Chinese property management sector. Jacob, thanks for your time today on the 7th of July. To begin, could you tell us how the Chinese property management sector differs from the broader real estate sector in the country?
Thanks for the question, Pranav. First of all, the property management sector in China is very different to the traditional real estate in China. Traditional residential developers, they are more like asset heavy and capital intensive. They develop the projects on their balance sheet and recycle capital. It is a very asset heavy business. However, for property management, it is very different. Property management companies, they do not own the projects they manage. Instead, they are hired by property owners to handle the day-to-day operations. Now, let me just quickly describe the revenue drivers. They have three major income drivers. The property management primary revenue comes from the basic property management service, which is basically receiving fee based on the floor area they managed. Secondly, which is relatively new, is called community value add service. It means service that go beyond the basic maintenance to enhance the living experience. For example, like education or retirement care. This is a really growth engine, and they can grow at like 30% on an annual basis and generate high margin, like a net margin of 18%. The final driver is the value add service to non-property owners, which includes something like sales or consultancy service. So basically, in conclusion, compared to the traditional real estate developers, which is more like asset heavy and is more like a cyclical business, property management companies, they are very different in terms of their stable stream of recurring income and also their asset-like nature.
Got it. Thank you, Jacob. You've looked at several companies in the space in your note. What companies stand out to you?
It's a very good question. I mean, to be honest, there are many property management companies which are listed right now. However, my preference and my recommendation are those have a safe company profile and also ideally backed by a parent, which is a state-owned enterprise, which basically means zero bankruptcy risk. So there are two companies that I like the most. The first one is called COPO, China Overseas Property. And the second one is MixC, China Resources MixC. So I like the first one, COPO, is because it's one of the few SOE managers with good earnings growth and dividend upside. The core earnings actually increased by like 14% last year, which is very solid. Also, because of the cost control and the economies of scale, the margin is expanding. So lastly, the company is backed by Kohli, which is one of the largest SOE developers in China. They focus on like very good projects in first tier and second tier cities with prime location. And the second one I would like to mention is called China Resources MixC. First of all, it's also backed by a SOE, which means very low or zero bankruptcy risk. And secondly, it is very unique because of the exposure to commercial properties like shopping mall and office. Around 1/3, like 33% of the revenue comes from the property management service to shopping malls and office. This is very unique because this kind of gross profit margin can be up to like 50 to 60%, whereas residential property management is usually generating like 15 to 20% margin. So there's a big difference here. And as of latest, MixC is currently providing service to around 120 shopping malls in China, and the number is growing steadily. So this is basically the two companies that I like the most.
Got it. I recall when a number of these property management companies got listed, there was some concerns around related party transaction risks. Could you talk a little bit about this?
It is a very good question. And to be honest, it is a very important risk that I think every investor should bear in mind when analyzing the sector. To begin with, many residential developers, they own a property management arm, which is separately listed. So it creates an inherent risk of governance of related party transactions. In short, investors have to closely monitor about how the PM companies manage their capital or cash. I will give two very short examples. The first one is Shimao Service Holding. They actually controversially spent like 1.7 billion RMB to acquire the property management arm of the sister company, which is called Shanghai Shimao. This is in 2021, where the parent developer was facing a liquidity crunch. And secondly, it's about Evergrande. I think many of us would know that Evergrande was facing a similar liquidity crisis back then. In 2022, the PM company, Evergrande Property Service, they disclosed that more than 90% of their bank deposits were used by the parent as security for third-party guarantees and then subsequently enforced by the banks. So essentially, it means the PM company cash is used to fulfill the parent financial obligations without proper authorization or disclosure. So basically, these instances highlight how an otherwise healthy property management company can be leveraged to prop up a failing parent, leading to some financial instability. But lastly, I want to really highlight that some of the property management companies, they are already actively cutting ties and decoupling with the troubled developers. Some of them, they are increasingly to operate independently as a listed entity and to reduce their reliance on other potentially unstable developers. So long story short, I think this is a very important area that all the investors should pay close attention to, and then choose the property management companies with very strong governance practices that either distance themselves from distressed parents or strategically acquiring other third-party projects, thereby diversify the income stream and to mitigate the relevant related party risks.
Got it. Thanks very much for the call today, Jacob. And listeners, check out Jacob's coverage of the Chinese property management companies on Smartkarma and tune into our next Smart Call. Thank you.
Thank you.